My name is Wasan Yerdao. I am the director of the Global Center for Diversity and Inclusion, GCDI department, under the great company called Black Economy Excellence. Black Economy Excellence is a company that initiates Purpose Black, a new e-commerce platform to fulfill one of its biggest targets, with the aim of creating 1 million Black millionaires in the next 10 years. It's my pleasure to welcome you all to this our weekly course webinar that is organized by our department on the topic how to start a business, the steps that should be taken. For those of you who want to watch our previous webinars, you can get them on our YouTube channel named Black Economy Excellence. If you like us, please subscribe and share to others. We have invited as a special guest for today's training, Mr. Nagati Shoma. Just on housekeeping, before we get started, if you have any questions during the presentation, please type them into the question box in your Zoom control panel. I will bring them up during the presentation and we will have time to answer them at the end. I am privileged to announce that Dr. Fisah Abtemariam, our CEO, is here with us today. Just to mention a few things about him, the Black Economy Excellence Initiative founder and CEO, Dr. Fisah, is a passionate educator, social entrepreneur, civil rights advocate, and researcher with 25 plus years of distinguished academic and business careers. He is well known for creating numerous businesses that have a profound social and economic impact. Dr. Fisah founded the first and largest prestigious accredited private university named Unity in Ethiopia. At its peak, Unity University offered education services to more than 12,000 students. Because of his strong belief in economic and social impact of education, he launched the Girls Education Project and personally gave free scholarship to more than 5,000 girls from economically disadvantaged families. Thank you for your presence, Doctor. Now, let me direct you to our today's presenter, who really makes this moment very unique for me because he is a true friend of mine in life. We know each other for more than 25 years since our first college years back in home in Ethiopia, where we both graduated in economics. Nagati Shoma, CPA, founder and CEO of the Bridge CPS company, brings over 2 decades of comprehensive, top-notch business expertise to the field of finance, accounting, and tax. A graduate of the George Washington University and a certified public accountant, Naga's experience spans several industries, including public and corporate accounting, hospitality, media, and government. He built his own firm to help clients understand the language of audit, tax, and build legacy in their business and support their households. He is also an adjunct assistant professor at University of Maryland Global Campus. Currently, he teaches investment, individual and business tax, and finance. He is also one of the special advisor team members at Black Economy Excellence. I really thank you, my lifetime friend, and now I let you to take the floor. Naga.
Thank you, Wasan. This is a great opportunity for me to be part of the webinar series at GCDI. And I appreciate Dr. Fisah for giving me the opportunity to be part of his team and also to let me run this particular series, webinar series. Now I'm going to turn off my camera and focus on the webinar so that I don't get distracted and you will not be distracted as well. Very good. So today's webinar is really to focus on, to walk you through on how to start a business and what steps that one has to take to go through the process and also register and start the business. So first thing first, the learning objective of this webinar is, why do you want to own a business? What steps should one undertake to start a business? And what are the feasibility checklists, and how to put together a business plan, source of funding, and deciding on the legal structure, and finally registering your business. Each of this learning objective, if we try to really drill into them, would take several hours. But as much as I can, I'll try to walk you through over the next 30 to 40, 45 minutes the steps, and then if there is any question, we can park it, and I'll get to them. So why do you want to own a business? You want to be, people start a business because they want to be their own bosses. You want to have the financial independence. You don't want to work, you don't really work well with others, and you dislike the policies and procedures. You also want to have the creative freedom. Also, you want to fully use your skills and knowledge, and you don't just want to punch your clock in and out. But be careful. Even though you don't like to punch in and out for 8 hours a day, once you own your business, it could be significant, and the time it may take maybe even longer. So the feasibility checklist, there are 4 things that you have to consider. One is the personal consideration, and there are specific personal considerations that are in place, and also there are requirements for success. And also, owning a business also have its own major flaws. The general personal considerations are: do you have the personality to adopt to and enjoy business ownership? Do you like to make your own decisions? Do you enjoy competition? Do you have the willpower and self-discipline? Do you plan ahead and get things done on time? Can you take advices from others? Can you adapt to changing conditions? These are the things that you have to really consider when you plan to own your business. So, and also you have to consider the physical and the financial strengths of a new business. Among the main question that you have to ask yourself is, do you have the physical and emotional strengths to handle businesses? Do you understand that owning your own business means working long hours? Uh, have you considered the family dynamics, meaning you're going to spend too much time, you may not have enough time for your family? Are you prepared to lower your standard of living while your business is growing? And can you afford to lose your saving? These are the personal consideration that you have to have before you start, into the venture. The specific personal considerations are: do you know why you are considering this opportunity? Do you know which skills and areas of expertise are critical to the success of your business? Do you possess these skills and know how to use them effectively? And can you find personnel who have the skills and expertise you lack? Or can you perform feasibility study, and do you have the time or the money to do so? Will this opportunity allow you to meet your career goals? So those are the kind of things that you have to consider before you launch on your personal business. So what are the requirements for success? The requirement for success are: does the business address underserved needs? Does the business serve an existing market in which demand exceeds supply? And the business, does it have a significant advantage over competitors? The advantage could be the price, it could be a location, or others. So if your answers to the question on this page, meaning these 3 questions, that the answer is yes, a yes response to any of the questions means your ideas has little chance for success. When I say you don't really have a chance, you have a chance for success, But there are other areas that you have to also consider. Among the uh, among the stuff that you have to answer is capital requirements for entry or continued operation excessives. Are there factors that would make financing hard to obtain? Are there potentials for potential detrimental environmental effects in place? Are there factors that prevent effective marketing? Or are there zoning, licensing, or other restriction that would really hinder you from starting your own business? And are there factors that restrict availability of resources like raw materials, skilled personnel, etc.? So these are the major flows of starting your businesses. So first thing first, the idea, the need, the expertise, the discipline, the family dynamics, the startup, the competition, the network, the resource, the location, the accounting in the future has to be in place for you to start your business. Once you check all this stuff are in place, the next thing that you have to do is really write your business plan. Why do you need a business plan? You need your business plan because it will help you run your business, obviously, and it also can help you get funding. Having a business plan also bring on a new business partner. It's also a tool to convince people that work with you or invest in your company. So a good business plan guides you through each stage of starting and managing your business. You'll use your business plan as a roadmap for how to structure, run, and grow your business. It's a way to think through the key elements of your business. So once you write your business plan, the next thing that you have to do is really find source of funding. So the source of funding are, it could be saving, it could be family and friends, equity, loan, crowd investment, crowdfunding, and also grant. So the first place, obviously, that you have to look for is your own saving. That's really critical, or equity. A personal resource can include profit sharing plan, an early retirement fund, real estate equity fund, or cash value of insurance policies. So these are the kind of areas that you have to look into before when you start, funding your personal business. So you checked, the idea, the need, the experts, all of this stuff. You write your business plan and you check your source of funding. The next thing that you have to consider is deciding on a legal entity that is best for your business. So there are so many kinds of business entities, but I wanted to really focus on the five common, common ones that people use. The first one is sole proprietorship, and then you have partnership, and then you have limited liability companies, S corporation, and last but not least is C corporation. So sole proprietorship is an easy form and gives you a complete control of your business. You're automatically considered to be a sole proprietorship if you do business activities, but don't register as any kind of business. A sole proprietorship do not produce a separate business entity. This means your business asset and liabilities are not separate from your personal assets and liabilities. You can be held personally liable for debts and obligations of the business. Sole proprietors are still able to get a trade name. They can also be hard to raise, but it is really hard to raise money because you can't sell stock, and banks are hesitant to lend sole proprietorships. A sole proprietorship can be a good choice for low-risk business and owners who wants to test their business ideas before forming a more formal business. So to summarize, a sole proprietorship have advantages. The advantages are ease of startup and closure. You can start it at any point and close it at any point. It also gives you a pride of ownership, and you can also retain all of the profits that you made. And it doesn't really require a special taxes and flexibility of being your own boss. When I say no special tax, when you file your taxes, you don't have to file a separate return if you own a sole proprietorship. What it means is, as part of your individual tax return, you also include your business's return. So you only are required to file only one taxes. What are the disadvantages of owning a sole proprietorship? Obviously, the legal concept that holds a business owner personally responsible for all debts of the business. If you fail, if the business fail and own debts from vendors and customers, not only that the business would be responsible, but the owner is also going to be responsible for the losses, and it would really dig into uh, its personal wealth. Uh, and also, the other advantage is lack of continuity. If the owner dies, the business may potentially die with them. It also have the disadvantage of lack of money, meaning nobody is willing to give you money, or since you are the only one who's owning the business, uh, you might have a shortage of financing. And there is also a limitation on the management skills, because you're the only one. You're not going to have the advantage of getting additional management skills from others unless you actually pay for it. And people also tend not to go and work for a sole proprietor, because they may not be able to get all of the benefits of employee benefits, like insurance and all that kind of stuff. So these are the disadvantages of owning a a sole proprietorship. The other legal entity type that we have is partnership. Partnerships are the simplest structure for two or more people to own a business together. There's two common kinds of partnerships. They are limited partnership and limited liability partnerships. The limited liability partnership have only one general partner with unlimited liability, and all partners have limited liabilities. The limited the partners with limited liability also tend to have limited control over the company, which is documented in a partnership agreement. Profits are passed through to personal tax returns, and the general partner, the partner without limited liability, must also pay self-employment taxes. So limited liability partnerships are similar to limited partnership, but gives a limited liability to every owner. An LLP protects each partner from debts against the partnership. They won't be responsible for the actions of the other partner. Partnerships can be a good choice for a business with multiple owners. Professionals like lawyers, doctors, tax accountants, and groups who wants to take their business ideas before forming one would really look at look at partnerships. So the advantages are benefits of collaboration and tax advantages, business confidentiality, a more partner and more funds, and they're easier to form and also run the business. So again, the disadvantage is unlimited liability, especially to the general partner, uh, differences and conflicts, because there are so many ideas running into the business. Uh, and also slower decision making, because the decision has to be discussed among the partners. It's a slower decision making compared to sole proprietors. And there is also lack of continuity here. If a partner dies, uh, it may impact the overall partnership. And there is a joint accountability, meaning all limited partners would be liable uh, for the partnership. The other type of legal entity is limited liability company. So an LLC is called, it's also called an LLC. An LLC lets you take advantage of the benefits of both a corporation and partnership business structure. It protects you from personal liability in most instances, from your personal assets like your vehicle, houses, and saving accounts. It won't be at risk in case your LLC faces bankruptcy or lawsuits. Profits and loss can get passed through to your personal income without really facing corporate taxes. However, members of an LLC are considered self-employed and must pay self-employment tax contribution towards Medicare and Social Security. So if you own an LLC and the LLC is owned by you, it has a feature of a sole proprietorship. That means it can be included in your individual tax return. But if the limited liability company is owned by more than one person, two or more, what they would do is the limited liability company would issue a K1 that would be, and all the profit and losses would go to, the limited liability company would not be taxed, but the individuals who are actually owning the company would be paying tax towards it. So LLCs can be limited life in many states, but when a member joins or leaves an LLC, some states may require the LLC to be dissolved and reformed with a new membership, unless there is already an agreement in place within the LLC for buying or selling and transferring or ownership. So an LLC can be a good choice for medium, a higher risk businesses, owners with significant personal assets. They want to be protected, and owners who wants to pay a lower tax than they would with a corporation. So the advantage of owning the limited liability companies are limited owners liability. It's really easy to form, unlimited partners, and tax flexibility because it just flows to your individual tax return, and unrestricted pay. And the disadvantage is you pay taxes and additional fees, difficult to make profit, and uncertain lifetime, and also it has limited benefits. S-corps, this is also the other form of a legal entity. So an S-corp, sometimes called an S-corp, is a special type of corporation that is designed to avoid double taxation, drawbacks of the C-corps. So S-corps allows profits and some losses to be passed through directly to the owners of personal income without ever being subject to corporate tax rates. Not all states tax S-corps equally, but most recognize them the same way the federal government does, and taxes and the shareholders accordingly. Some states tax S-corps on profits above specified limits, and other states don't recognize the S-corp elections at all, simply treating a business as a C-corp. S-corp must file the IRS to get the S-corp status, a different process from registering with their states. There are special limits on S-corps. S-corps can have more than 100 shareholders, and shareholders must be US citizens. You will still have to follow strict filing and operational process of a C-corp. S-corps can also have independent life, just like C-corps. If a shareholder leaves the company or sells his or her shares, the S-corp can continue doing business relatively undisturbed. S-corps can be a good choice for a business that would otherwise be a C-corp, but meets the criteria to file an S-corp. So the advantage is limited liability, easy to transfer shares, favorable tax characterization, and reduced burden of taxation, and high credibility and less risky. The disadvantage is incorporation and filing can be expensive. Mandatory qualification may lose the status in case of delay. If you don't file it really quickly, you may lose the status. And improper record keeping may create a problem for you. So you have to make sure that your books are in order. The other type of forming a business legal entity is a C corporation. A corporation, sometimes called a C Corp, is a legal entity that is separate from its owners. A corporation can make a profit, be taxed, and also can be legally held liable. Corporations make offers the strongest protection to its owners from personal liability. But the cost to form a corporation is higher than any other structures. A corporation also require more extensive record keeping, operational process, and reporting. Unlike sole proprietorship, partnership, and LLCs, a corporation may pay income taxes on their profits. In some cases, corporates are taxed twice. First, when the company makes profit, and again, when the dividend is distributed to the shareholders on their personal tax return. So a corporation have a completely independent life separate from its shareholders. If a shareholder leaves the company or sells his or her share, the C Corp can continue doing business relatively undisturbed. A corporation have an advantage when it comes to raising capital because they can raise funds through sale of stock, which can also be a benefit in attracting employees. It can also be a good choice for medium, higher risk businesses that need to raise money, and business that plan to go public or eventually be sold. So the advantage of a C Corp is limited liability, perpetual existence, enriched trustworthiness, and no restriction on shareholders, and it doesn't have any limits for shareholders. And it also have a tax advantage. The disadvantage is personal liability in case of fraud, double taxation, costly to incorporate and maintain, legal formalities and regulations, no deduction for corporate losses. So we pretty much went through five different types of business entities. So to summarize these entities, I kind of prepared a table. So the four types are really sole proprietorship, S corporation, and C corporation, and limited liability company. The formation for a sole proprietorship is filed with a county clerk if doing business under an assumed name. Register the business with the states in most cases, and you have to also require to state filing within 60 days of formation, and for S corporation, and for C corporation, the state filing is also required. For limited liability companies, state filing is also required. In terms of personal liability, for sole proprietorship, owners have unlimited liability. When it comes to S corporation, shareholders typically not liable for corporate debts. C corporations, shareholders meetings and minutes required, and annual state reports are required. And for limited liability companies, formal meetings and minutes are not required, but annual state reports are required. In terms of requirements, sole proprietorships have relatively fewer requirements. S corporations, board and shareholder meetings and minutes are required. And also annual state reports are required. For C corporations, board and shareholders meetings and minutes are required, and annual state reports are required. For limited liability companies, by default, there is no tax on LLCs, but income and losses can be easily, should be passed through to the members. For taxation, for sole proprietorship, there is no separate taxation. All income and losses are passed through to the owners. The same thing with the S corporation. The S corp would not be taxed, but all the income and losses would be passed to the shareholders. But when it comes to the C corp, C corps will be taxed. If there are dividends, dividends are also distributed to shareholders, and dividend income is also taxed at the individual level. Limited liability companies, by default, there is no tax on LLC, and all income and losses would be passed through to the members. But one thing that I want to emphasize here is, even though the LLC will not be taxed, they're required to file their taxes on a timely basis. Tax reporting for sole proprietorship, the sole proprietor would file Form 1040, and under 1040, there would be a Schedule C, the partnership forming 1065 for distribution via Schedule K1. So even though you file your taxes, the business tax return itself would be included as part of Schedule C. For S corporations, you're required to file 1120S, and it's also called profit and loss distribution on Schedule K1. The Schedule K1 basically would be included in the owner's tax return as K1. For C corporations, Form 1120 is required, but every time that they distribute dividend, they have to issue 1099 div for the owners of the corporations, and that 1099 div would be included as part of tax reporting for the individual owners. When it comes to the LLCs, pretty much the same as the sole proprietorship. If the ownership is only a single individual, but if it is more than two, they're required to file Form 1065, and the K1 would be included as part of the individual tax return. So in terms of recommendation, the S1 is the sole proprietorship is recommended for owners wanting minimal formalities and maximum flexibilities, and they don't want to be worried about a liability. S corporation is really sorry. Yeah, S-Corp are really recommended for owners wanting to liability protection of a corporation with simplicity of pass-through taxation of income. And a corporation is recommended for owners needing maximum tax and ownership flexibility with liability protection. So the last but not least, the partnerships are recommended for owners wanting a liability protection of a corporation and the simplicity of pass-through taxation of income with less formality. So once you decide on the legal entity of your business, the next thing that you have to do is you have to prepare your business to registering your business. So for you to be able to register your business name, you have to do a couple of things. The first thing that you have to do is you have to find a name that would really reflect your business, and anything that would you want. But before you do that, you have to check the availability of the name, or if the name itself was is taken. If when BEE, or Black Economic Excellence, started to register its business, the first thing I'm sure that they did was they checked on trademark site, search site, U.S. patent, and state corporation to make sure that the name is not being used by somebody else. And then you have to learn about your business structure needs. And once you decide that, and then you have to register with the state. So you will want to choose a business name that reflects your brand identity and doesn't clash with the type of goods and services you offer. And once you settle on your name, or the name you like, you need to protect it. There are 4 different ways to register your business name. Each way of registering your name serves a different purpose, and some may be legally required depending on your business structure and location. The 4 different ways of registering your business are entity name, and this is really required, and it helps you protect your name at the state level. You also have to protect your trademark, which would protect you at the federal level. And the third thing is you have to protect doing business as. It doesn't give you a legal protection, but it also is, you're legally required to name your business. In this case, let's say, Purpose Black or Black Economic Excellence. That is the way that, business would be run. And once you decide, especially in this day of age, you have to register your website, and you have to also protect your domain name. Once you register the business, you have to get a federal and a state tax ID. Once you get the state and federal tax ID numbers, they're like EIN. They work like a social security numbers for your business. Using these numbers, they will let your business pay state and federal income taxes. So in a summary, the streamlining of a business startup process is really making sure that entrepreneurship is what you want. And then you have to decide what kind of business you want, and research your ideas, and write your business plan, and then choose your business structure. Once you do all that, you assemble your business, your team, and finally you handle your paperwork. Meaning you have to register your business. This is all I have, and thank you so much for giving me the opportunity to come into this event and speak about how to start a business. Thank you so much.
Now we will go ahead and take the questions from our participants. There is one question, Naga. What is the tax filing schedule for different business types, quarterly or yearly?
That's a very good question. So when we talk about tax filing, let me go back to, I think it would help if I share my screen again, because that's really important for people to understand what I'm talking about. So if you look at the sole proprietorship, you're not really required to file anything, and every tax filing would be included in your individual tax return. So, but for S corporations, you're required to file income tax return once a year. And the same thing with the C Corp and limited liability companies. For S Corp, it is called 1120S. For C Corp, it's called 1120. And for limited liability companies, it is 1065. Uh, this is really with regard to the income tax filing. There might be additional requirement of a tax filing depending on if you have employees. It could be quarterly, it could be annual. Uh, there is also additional requirement when you were talking about SALT, state and local taxes. That is, monthly, and it's a completely different topic, and it takes somebody with that expertise to really discuss the tax filing requirements for SALT. Does that answer your question?
Yeah, I hope so. We will get a feedback, and yeah, it is answered. Thanks. The other one is, please show the slides reflecting advantage of different business types.
Uh, I can share. So you just want to see the slides. Here's the slides, but I'm not sure how much you can capture uh, and which one you want to really stumble on, and you want to have any specific question. I'm happy to expand and dig deeper and discuss.
Yeah, if it is a specific
Or
question.
if you want, or I can do this one.
Yeah, my advice would be this the whole training webinar will be on our site, so anybody can go to our YouTube channel, Black Economy Excellence, and review any part of the trainings and past trainings also. So this will be available for future reference, so anybody can browse on it. Yep. Uh, let me see if there is another one. Okay. Where does online business fall under in terms of legal entity?
Uh, Online business is not a legal structure. You can structure your legal business in any business forms. It could be so under sole proprietorship. It can be a S corp. It could be C corp or limited liability company. You just have to really think which way really fits the purpose of your business. Online business is not really a legal structure by itself.
Okay. There is another one. What resources people have that help them in the process? What is the role of SBA?
That's a very good question. Small business administration is one of the key uh, federal government agency that would help small businesses. It would provide, advices. It would provide also funding and also expertise. Even writing some of the business plan for them. So it is really imperative if somebody is really serious about starting their own business, you have to go into the Small Business Administration website and browse through, and you would get a lot of resources that would help you start your business.
Okay. I have another one. Is it is at what rate is SCorp taxed?
SCorp would not pay tax. The net profit of the SCorp, the SCorp basically issues K1, and the K1 would be included as part of the individual tax return. So SCorp, like LLCs, would not pay taxes at the company level.
Why do many people go to Delaware to register their business? What is the mystery? Do you advise it?
That's a very good question. By the way, Delaware is not the only place that businesses go to register their business. There are a couple of places that you can go to in addition to Delaware, but I'll answer the question at the same time. Florida is the other place that you want to go to. Nevada is the other place that you want to go to, and Texas is the other place that you want to go to. These are places that companies would not pay state taxes, state income taxes. So businesses choose to register their businesses in areas where they do not pay state taxes, and Delaware is one of them.
Okay. Why is it hard to hire employee in sole proprietorship?
That's also a very good question. Usually, it is all about benefit. You know, sole proprietorship don't really have a big public image in a way. So they really try to save as much money as they can. So they may not be offering you medical benefits because of the costs that is really for, you know, to get a medical insurance. Because the cost is so high, they would not offer that kind of benefits. I'm not saying that all of them don't offer, but it is not easy for them to offer you. So when you think of getting employed and working, S-corps are not one of those places that you would consider.
So they are not required by law to provide these. Sorry for the interjection.
No, you're not. You're not required by law. Just because you're hiring somebody, and depending on your size, you're not required by law to provide that benefits. Because there are some, but there are marketplaces that you can go to. You can still offer, but it would be really costly for the employee to contribute to the benefits, because they would require you to chip in, and you would not be able to afford that.
Okay. A residual income earning from S-corp taxed like registered income?
I'm not sure what the question is. Can you rephrase it? Or
are residual earnings from S-corp taxed like regular income?
The residual income from meaning it's a profit, obviously. So yeah, that profit would be included as part of the owner's personal income. So that would be totally taxed. So he cannot put aside, he can put aside for reinvestment, but it is really after tax. It's not before tax.
What is the process if we want to close the company?
It really depends on what kind of legal structure the company has. So if it is a small proprietorship and mostly the registration is with the state, you have to be able to inform the state that you start providing services or goods, and you have to pay all your taxes that was related to the time that you have been active, and pay all of your liabilities, existing liabilities, uh, before you completely unwind the business. Uh, so in all cases, you have to do all of that to unwind the business.
Yeah, okay. Can all kind of business register in one state and work in a different state? Is it allowed legally?
Yeah, well, you can register your business at the federal level. That is a requirement. Then in places that you wanted to function, you have to register either as a resident or as a non-resident uh, company.
Can you change from one form into another, for instance, from SCorp to CCorp?
Absolutely, you can do that. You have to, yes, absolutely. There is a form that you have to fill in and send that over to the IRS, and they would start to recognize that immediately.
Okay.
So the deadline for that is usually March 15 of the year.
Yeah, there is another suggestion just for information. As a small company, you can use a professional employer organization to offer benefits. This is as an information.
Yep, that's correct. So you can also join forces with other small ones, and they would offer you a competitive benefit rates like insurance and all that. There is a marketplace for that.
Okay. So what is the main difference between S Corp and C Corp? Major difference.
The major difference is the tax. The S corp tax would be flow through to the uh, to the shareholders. The S corp itself would not pay any taxes, whereas the C corp would be paying tax as a corporate structure, and also the dividend would be taxed at an individual level. So there would be a double taxation when it comes to C corps.
Mm-hmm. Mm-hmm.
Yeah, I'm sure the most of the questions are around uh, taxes and really the legal structure, and that really warrants or that really suggests that you have to really think about having one webinar in the areas of corporate tax. I would say uh, corporate tax. When I say it could be, it would include most of the legal structures here, the S corp, the C corp, and the limited liability company. We can prepare one webinar and really discuss most of the questions.
Yep, there is one other question. At what point does it make sense to go from S to C Corp?
Well, the size is one factor. It would be hard for you to, uh, and also you have to look at the advantages of the C corp. Uh, but as long as the size is very small, the number of shareholders are small, and I mean, if you own a C corp, the requirements are less. But when you move into the C Corp, you need a board, you need a strong shareholders meeting and minutes requirements. The reporting is significantly important, and you would know, the business, the management would know that it is time for them to move from S Corp to the C Corp, and that is the point where you would decide. And also the share, when you start to sell the shares, uh, there are so many additional requirements that you have to fulfill. So maybe that's the point where you would be consider uh, a C corp.
We were a sole proprietor, then LLC, and just made the S Corp electronic. What would be the impetus for a change? This is all very helpful information. Thank you. Let me see if I have another one. Okay. It seems we're done all with the questions. It looks like we have covered all the questions forwarded. Naga, would you like to add anything before we wrap up?
No, these are really good questions, and I appreciate the engagement and for asking questions. And I hope I've answered all of your questions. And thank you for the opportunity.
Great. Thank you, everyone. We appreciate you for being here with us today. We have the coming next course webinar at the same time on Saturday, December 5th. We will deal with another different topic. It is technology related on IT. You can go and register on our website at www.blackeconomyexcellence.com/GCDI webinars, and you can invite others. Please do so. Thank you. See you next time.